All right, everybody, this is Dylan. So from the Year Zero report, and this is going to be your daily brief for August 29th, 2022. We're going to start off looking right at the markets here. You guys can see that tech's down, communication services down, pretty much everything in the red with the select few, except for energy. Energy is doing quite well given the energy crisis spreading across Europe and into other portions of the world. I would expect this to continue to go on as we see the conflict in UKR, Russia continue, energy crisis across Germany, the shutting down of nuclear plants, and such forth. I would expect this theme to continue throughout. Let's hop over to a few charts. We're going to start off looking at the US dollar, and this is going to be a daily chart. So a few key levels here. 106.61 is a strong Fibonacci support resistance level, which we managed to flip, get above, fall under, and we're back above. These blue bars right here we're looking at are going to be demand zones and demand zones and supply zones. Both of these were once supply zones, and when they are taken out and flipped into a support, they then become demand zones, which we would look for a reaction when we fall back in. So we can see that we broke out, fall back in, strong reaction, we held, we come back up, we end up flipping this zone. First we reject, fall back out. We've now broken out above it, and we're flipping it right now into a daily support. So is inflation under control? By looking at the dollar, definitely not. The dollar is strong, and as strong as could be. You guys can see we've just been on a steady climb up for quite some time now. This is going back to the beginning of 2022 right back here. So just ever since, steady climb up. Let's look over at 10-year Treasury yields. And this has been rather alarming in my opinion. So we're above 3% now, which is something we haven't seen in quite a long time. If we look over at a weekly chart, you can see that since about a year ago, August 16th back, you can see that we've been on a steady increase. And this is expected. So this is the debt market. When you start seeing bonds surging and stocks going down, something's wrong. And we're looking at an economic crisis at that point. And that's exactly what we've been watching pretty much this entire year. So much like we talked about just earlier with the dollar, here we have a demand zone and a supply zone above, and we're kind of ranging within that. As you can see, we broke out, we weren't able to sustain above, which was good. When this breaks out and continues to break above 3%, markets are going to react terribly. And what I mean by that is that you're going to see a pullback across all stocks, and that's what we've seen. Now that we've begun to climb back up since about the beginning of August, we've tried to come back up and test this supply zone. When we did test it, we rejected right up here, which we thought we would see a pullback possibly back into this demand zone, maybe not as deep, but instead we pulled back on one day, and now we've continued throughout today to test that supply zone once more. What we don't want to see is us break above the supply zone again. If we can break above and hold and begin surging higher, you're going to see stocks plummet. Now, if the reverse happens and we see a rejection here in the supply zone and the 10-year Treasury bonds begin to go down, we want to look for a reaction within this demand zone. But as it begins to fall down to this, we should see some relief as money switches from bonds back over into the stock market. So as money leaves bonds and goes into the stock market, we'll see the stock market rise. Going from there, let's look at the euro. This is just a crazy picture in my opinion. The best way to look at this is on a monthly chart. So each bar equals a month here. So this is going to go way back. We're going to look all the way back to early 2002 here. And it has been an ugly picture since about February of 08, right? It's just been a steady decline, dropping in value. So this is devaluation of the euro basically. And as you can see, we're at a demand zone. Basically right at the tip of it. We've touched it and we had a strong reaction to bounce out. What we want to see is this hold. If we ever lose this blue box, it is over for the euro. It would be just chaotic, and the euro falling out of this support region would have huge effects on the global economy. Another level of importance is back here, and it's about $1.03615. We lost that, you can see here, back in 2017. It acted as a strong support. We were able to sustain that, but we've now lost that. So if we look on a lower time frame chart, we're going to be looking at the daily here. We wicked down, didn't quite reach it, but we're able to bounce up, but we ended up having resistance. So as this was once support, as you can see back here, we've lost that, and it has now turned into resistance. We might range in between this for a bit, but what we do want to see, as I mentioned earlier, is this support region be held. Once this is lost, it's game over for the euro, in my opinion. All right, let's look at the S&P 500. SPX is what the ticker is going to be called, and this is the futures market for the S&P 500. Again, we're looking at a daily chart, and the same as before, we have supplies, demands, and demand zones, right? We've now lost this throughout today, so what we're going to do is mark this as a supply zone. So it looks like we're going to begin a turnaround here. I would expect the SPX to drop down to about 3915 over the course of the next few days. Maybe by the end of the week, we'll see this this hit down. Now, if we lose this fib level right here, of course, our next level would be down in this demand zone at about 3636. This is what we're watching here. And as I talked about previously, the 10-year Treasury yield is going to have an effect on that. If we see it break above the I believe it is 3.2%, we will see a pullback in this stock market that we're looking at right here, as well as all other stocks in the U.S. market. Now, if that Treasury yield pulls back, of course, we might see a catch here at this fib level, to which we might do another test, something to the nature of this, right? Come down, we test this, and we come back to do another test. Now, what happens in this area, whether we reject, we'll be telling if we're going to range throughout. But if we break through and we flip, then we'll be looking for this upper supply zone to test again, much like we did back here on the 15th of August. All right, so with indices out of the way, US dollar, Treasury yields, let's move over to Bitcoin real quick and just take a look. I think the best way to look at this is actually going to be on a CME. So this is a futures chart, much like we were just looking at for the S&P. Real simple in my opinion. We're in a range. You have your upper band of the range, lower band of the range, and we have a range EQ which sits right in the middle. We fell underneath. We coiled up just under, couldn't get above. So of course what follows is a steady drop, and that's what we've seen over the last few days. This weekend in particular, we saw Bitcoin take another dip down. Now we want to see the support hold down at about 18,525. If we lose that, we'll likely take another leg down, eyeing about 15,000. Otherwise, we range within this, right? And what I mean by that is, say we drop down, we hit this, we come back up, maybe pull back, flip it, test it as support, and then we'll work for the top. Or we just range about. And what I mean by range about would be just something of back up, back down, back up, back down, until we get a break, right? Maybe a fake out break, and then it gets bought up heavily, which sends us right back to the top. So that would be your ranging motion, right? All right, now that we're getting through that, let's get into some more news stuff. Now we'll get off the charts and the fundamentals and technical stuff there. What we have here is an article from Zero Hedge, and this can be Peter Schiff, in his opinion about student loan forgiveness, which we just saw from the Biden administration last week. So let's read through this real quick. And I think everybody should be able to follow along with this and get the idea. If the government's giving you relief on a student loan debt, where are they going to get the money to pay back that loan though, right? It has to be paid back at some point. Of course, tax dollars are going to be the answer to that. So let's go through this real quick. Last week, Joe Biden announced a student loan forgiveness scheme. Peter Schiff appeared on Newsmax Real America with Dan Ball to talk about the cost of forgiving student debt and the growing recession. Now, bear in mind, our political establishment does not believe that we're in a technical recession yet. They've actually gone to the lengths of changing the definition of what is a technical recession. In my opinion, we're in a recession. We've recorded more than 2 quarters of negative GDP growth, which it would be the technical recession language there. So continuing on with this, Peter said that despite all the claims to the contrary, this is just going to add to the inflation problem. Biden claims that forgiving $300 billion in student debt won't impact inflation. Chuckle, chuckle. How is that going to work? Peter said it won't. In fact, this is pure inflation. So the article goes on to say, all the money that students are not going to repay to the government is just going to print. So when they print money, what are they doing? They're adding to inflation, right? Okay, so let's skip down to the bottom real quick. Remember, the only reason we have all these student loans is because the government provided them or guaranteed them. The only reason college is expensive is because the government provides so much money in the way of loans. But now that they start forgiving loans, students are going to borrow more money than ever before. Because the colleges are going to tell the students, hey, who cares how much you borrow for college? you're not going to have to pay any of it back anyway. So we're going to double your tuition. And don't worry, maybe we'll throw in a free car. And now this is a quote from Peter Schiff, but he's pretty much hit it right on the head there. Those loans are going to have to be paid off, whether it's through taxpayer dollars or it's from the student himself. Either way, it's adding to the inflation problem. Moving right along here, let's go over, this just came in a bit ago. Biden's to give a primetime speech on Thursday on protecting democracy from zero hedge, something to keep an eye on. I would imagine that would probably be in the later evening, but who knows? I'll give you an update on that with the next daily briefing. Moving over to UKR and Russia and what we've seen developing over there. Now I find this interesting because we've actually seen Americans beginning to stockpile in iodine pills as well. More so in the prepper community, which I agree totally. It's better to be prepared, right? Ukraine war, Moldova ships in 1 million iodine pills amid fears of nuclear disaster. And if you guys recall, Moldova is right next to UKR there. We'll scroll down. Moldova has imported 1 million iodine pills as fighting rages around a nuclear power station in neighboring Ukraine. But the country, with a population of 2.5 million people, insists locals should not panic. Shelling has intensified near Ukraine's Z nuclear power plant, the largest of its kind in Europe, with the UN warning fighting could lead to disaster. So in short, basically, Moldova citizens are being supplied with iodine pills. Sounds like not enough for the entire population, as they have a population of 2.5 million, and they've now ordered 1 million. I would imagine over the days to weeks to come, we may see that increase so that they could cover their entire populace. But as I mentioned earlier, I've heard throughout a few prepper groups, as well as just following a few channels, more and more American citizens are also going the same route of protection of just having the iodine pills just in case they need them. All right, so this is some interesting stuff. I have some 2 articles here about the Pope, some movements of the Pope, and then some financial information coming out from the Vatican from the Pope. Here we have from Vatican News, the Pope is to visit Kazakhstan in September. Interesting data point in my opinion. When is he going to be in Kazakhstan? It looks like the 13th through the 15th of September. So something to keep an eye on there, and obviously an interesting location as well, given hidden history and knowledge about Kazakhstan. Moving right along, let's go over to another article with the Pope involved. Pope Francis instructs the Vatican entities to move all funds to Vatican Bank by when? September 30th. So a lot going on around September. But this is huge in my opinion. Let's go right down, read it. Pope Francis has ordered the Holy See and connected entities move all financial assets to the Institute of for Works of Religion, the IOR, commonly known as, what is it? The Vatican Bank. That's the oldest bank in the world, the Vatican. Interesting stuff there, but this is rather alarming. Why would they want to move all assets into the Vatican Bank with a deadline of such short notice? Perhaps they know something's on the way. It's just eerie, in my opinion, to see a huge economic shift like this and in such short notice. So a lot going on with the Vatican throughout September and the Pope in general. We'll follow this and we'll keep you guys updated on that. And moving over to the energy crisis. This is a great website for you guys. If you guys want to look up here, it's euenergy.live. This is going to be a day ahead electricity prices for tomorrow, of course, because it's a day ahead. So the futures market of euro per megawatt, right? So Austria, in order of highest to lowest, we're looking at $725 a megawatt. This is insane, insane. I mean, we're talking where it was about $70, $100 about a year ago. Now we're dealing with something up into multiple hundreds. I would imagine that we could see this break into the thousands easily. The futures market for European energy going into the winter has already breached $1,300, 1,300 euros for this coming winter. So this is just the day ahead looking for tomorrow. This is something we'll be covering nearly daily in these daily briefings. Because I would imagine what we see happening here energy-wise is going to bleed into the economy in the United States as well as many other Western nations, if you will, NATO members, stuff like that. So this is extremely alarming. almost to the sense of hyperinflation. If you guys have been following this for the last week, it has just been jumping and jumping day by day. I believe last Monday we saw a 25% jump in European energy in one day. 25%. This is massive, people. Pay attention. Pay attention. But this is about all I got for you today. We'll have more stories tomorrow. If you guys like the content, please like and subscribe. You can find the Year Zero report on YouTube, Bitchute, Rumble, and as well as on our Telegram. And all those are going to be at Year Zero report. This is Dylan Zoso with the Year Zero report. This has been your daily briefing for August 29th, 2020. And I'll see you guys tomorrow.